Hello, friends. This is Marie Hancock. I'm here again, not to entertain, but to educate, as you've come to expect from my channel. Today, we're going to be talking about a question I get often. What are the differences between the different insurance product or insurances that you must get when you're purchasing a home? You've heard of PMI, you've heard of MPI or MI, and you've heard of home warranties. I get so many people confused about why do I need all that? Don't I just need one type of insurance? I feel you, friends. I didn't know until I started purchasing properties myself. So here is the nitty gritty that you must know. MPI is what the lender uses to protect their investment. And when you say, what is their investment? I'm making the purchase. Well, their investment is the money, the difference of the money that you're putting down on your home. They're loaning you, right? So let's say you're purchasing a home for $400,000 and you are not coming up with 20% of 20 to 25% of the 400,000. The bank deems that to be a risky investment for them to foot more than 80% of that $400,000. So they put something called PMI, but they don't pay it. You pay it. Okay. So it's included in your monthly payment. You may not even feel it, but generally it used to be about 1.75% of the total loan amount. During COVID hardship, those percentages were a little bit lower, but I believe that it's back up to the 1.75% that it used to be traditionally, but it varies by loans. So talk to your lenders, okay? Now that's PMI. MPI or MI, mortgage insurance flat out, is what, if you are a savvy individual that does not have a whole lot of emergency funds or cash just laying around the house that you could pay off a mortgage should a hardship happen, I would recommend you get, right? Now that there's no specific percentage, you purchase what you need. You could purchase it for the loan amount, the $400,000 of the loan balance, which is ideal. It's usually something called also a term policy. It's a term policy that lasts you for the life of the mortgage. It's kind of like you are paying insurance on your car until you no longer have that car, right? So you get that, and in case something happened, they would pay your mortgage balance, or they would pay you a tax-free benefit that you would use then to pay that mortgage balance. It's a little more complex than that, and I would love to address your unique situations in the comment down below, but that's really briefly what mortgage insurance or MPI is. And to address now home warranties, what do they cover? Oh, let's go back to PMI for a second. No, let's not go back to PMI. Now I'm going to be introducing a fourth one briefly that you need to keep in mind as well. Let's say there's a type of insurance that's required, that the bank actually require for you to close on a loan with them, that protects you against act of God, right? What are act of gods? That's a whole other, video together. But just think of fire, fire, like we have wildfire going on in Hawaii right now, right? In California, a certain part of the United States. We have storms, we have derechos in the Midwest, and, a snowstorm, hailstorm. All of those things are covered by your insurance and included in your monthly mortgage payment, right? With which we call PITI, principal, taxes, insurance, and all of that good stuff, right? So that's something to keep in mind. But home warranties would not cover you when act of gods happen. They just don't cover that. There are certain exclusion and special riders that you may get on a home warranty that would cover maybe up to $2,500 if you have a little roof hole or whatever. But there are so many exclusions to that. So bottom line, if you're getting a home warranty, you're getting it for things that are not part of the dwelling. Okay, I'm using a technical term, but let me keep it basic. You have your furnace goes out, You have a coverage for when your water heater just, hey, boom, it's water all over the place. And now you don't have any hot water to bathe in. Your microwave could be part of that plan. Some plans don't have it. Your refrigerator, your dishwasher. Now, if you have money in emergency fund to fork out for all those things, you don't need a home warranty. You don't need a home warranty if you're purchasing a house that have brand new appliances or less than 5 or less than 3 years old, right? But down the line, you may need to, just making provision. So I hope I've addressed all of your questions. If I have not, I'm more than happy to address any questions you may have in the comment section below. Thank you so much for sharing space with me today.